Hey YouTube, welcome to episode 29 of my investment journey series, the series we do right here on my YouTube channel where we look at my Trading 212 portfolio, look at my stocks from the previous week, we'll see how things are looking, if they're looking good, maybe they're bad, what I've bought recently, how dividends I've received, etc, etc. And to those who have seen my videos before, you'll know the script by now, you'll know what sort of stuff I go through, so I'm not going to spend too much time giving intros as much these days, and I'm just going to jump straight into it here. So first of all, let's take a look here at the portfolio value in total. So we're sitting now at £9,322.50. So I've invested £9,227.10 of my own money, and right just now this portfolio is giving a positive return of £95.40, so 1.03% up overall. So if we look at the weekly view as usual, and we can see from last week the portfolio was £9,177.34 and it was at £204.70, so 2.28% in the green, 2.28% positive. So we went from 2.28% and now we're at 1.03%. So there has been a drop in the value of my investments, and this week I have actually invested some more money. I actually did that yesterday. This is Saturday I'm recording this. So I invested some more money yesterday, which was Friday, and I'll show you what those are. But let's just take a quick look up here now, and I'll show you the ISA utilization. So for the year so far, 38%, as you can see. And again, guys, the reason I do this is just to be totally transparent with all of you. Let's now jump to the history of my Trading 212 account, and we will just have a quick look this week. So first of all, dividends. We have not received any dividends this week. So the last one you can see there was the 13th October, so there's not been any from this previous week. We'll head to the orders tab. So yesterday, like I was saying, which was Friday, I bought more Shell, so I'm continuing to average my position down in Shell, so I bought 10 more units in Shell, as you can see there. I also bought another 2.5 units in the iShares Global Clean Energy ETF. That's an ETF that I've recently invested into, and one that I think will be extremely promising long term. So I got 2.5 units more there. I bought 5 units in the iShares Core FTSE 100 ETF. Again, just kind of increasing my position there while it's so cheap to do so. I then bought 10 more units in Legal and General Group, one of my favourite UK stocks. They pay a really healthy dividend, so another 10 units there. I then increased my busy pie in Trading 212, so I bought more McDonald's and I bought more Starbucks. And my busy pie, for those who don't know, I'll take you over to that quickly just now. So the busy pie here, you can see the holdings in this pie. I've got McDonald's and I've also got Starbucks, and McDonald's is taken up, I've set that to 55% of this pie, and Starbucks is 45%. So the whole idea behind the busy pie, just to those who don't know, these are two places that I see always happens to be busy. So if I'm out and about, if I'm driving past them, if I'm walking past them, if I'm possibly going there myself, although not this month because I'm doing the whole no takeaway challenge for myself. I'm not having a single takeaway, including coffees, but I'm not getting in touch now. So yeah, these are places that are always busy, and I just kind of ask myself the question, do I think in 5 or 10 years time will these companies still be as busy as they are today, if not busier? And do I think they'll be more profitable than they are today? Will they be bigger than they are today? And the answer is a yes in all those cases for these two companies. So that's kind of the idea behind this busy pie. I don't really look into the fundamentals of the companies too much here. This is kind of just to take it a bit easier with these holdings. It's not something I'm as strict on. And yeah, you can see, I mean, I've set my goal there to £1,000, and I'm currently 31.43% through this goal, and it's now shown that return £8.03, so 2.62% in the green. So yeah, I'm probably going to increase these positions and probably do so soon, but I'm also going to add a few more slices to this pie. I'm thinking one of the companies I might add into here would be the likes of Greggs, because that's another place that always seems to be busy. Don't know about you guys, if whenever you pass a Greggs, if they always happen to look busy, you can let me know in the comments section below. But yeah, McDonald's, Starbucks, Greggs, I think 5-10 years down the line they'll still exist, they'll still be as big if not bigger, and they'll still be busy. So yeah, that's the idea behind this pie for those who do not know. Let's just come back to the portfolio overview and go to my investments. And I'll just skim through these this week because there's no real reason to drag this out. And I'll start from the bottom this time just to switch things up a little bit. So I've got the Vanguard FTSE Emerging Markets ETF, the VFEM. Last week, it's actually down 0.36% from last week. But overall, it's still one of my best investments. It's 12.79% up overall for me. It's in the green, £118.30, so I'm happy with that. The VanEck Vectors Video Gaming Esports ETF is the next one you can see there. I've got 3 units in there. That's currently in the red for me. It's a recent addition to the portfolio. And yeah, as you can see now, we're down £2.83. But I think long term, this industry has got a lot to kind of prove, and I think it's going to be one that's going to continue to grow and it'll get bigger, and I really can see a big boom coming with the whole esports industry very soon. So yeah, that's kind of why I'm invested into there. Starbucks, we've kind of covered that one there already, part of my busy pie. From last week, they're up 2.53%, which is good news. But again, long term, I don't look at these weekly percentages and stress out over them or get excited over them. I think 5-10 years down the line at a minimum, and that's my mindset with this investing world just now. Royal Dutch Shell's next up. So I increased my position with Shell yesterday, bought another 10 shares. That's, like I say, to continue averaging down. And right just now, Shell's just taken an absolute battering, as we can see. They're at their cheapest ever price. And yeah, I just going to continue averaging it down. So that dotted line you can see there, or the hyphenated line, whatever you want to call it, that will gradually start to come down as I start to average my position down. And I think long term with Shell, we're all going to be, or I say those of us who are invested in Shell, I think we'll be happy 5-10 years down the line. I think everything's going to be all good again. But that's my thoughts with Shell. National Grid here, my 5 shares, so down 0.19% from last week. And yeah, these are all free shares. I don't really talk too much about National Grid. You guys who watch regular will know that. Next up's MGM Resorts, again 5 shares, currently minus 22p, so they're down, but they've actually managed to jump back up quite a bit recently. So looking at the weekly view, you can see it's just been a strong climber this week, and that's kind of my average point there, that dotted line, and we're now above that, so that's good news for me. And I can see this continuing into next week and the week beyond, so hopefully that's going to be profitable for me soon. McDonald's, again, we've covered that already, and weekly view 0.3% down, whatever. Again, long-term view, I think it'll be good. Legal & General's next. Increased that again this week, as you saw earlier. So I've now got 260 shares in Legal & General Group, up 3.43% from last week. And yeah, long-term, it's going to be a strong investment to continue holding on to, in my opinion. iShares S&P 500 healthcare sector is next up, 0.38% down from last week, and 38 units. So I've not really increased anything there, as you can see. iShares Physical Gold, 16 units, currently £35.64 down with this one, so a drop, or should I say in the negative, by 7.27%. The iShares Nasdaq 100 ETF is next up here, weekly view, 3.57% down from last week, 2 units still, expensive ETF, but again, one I'm a big fan of. iShares Global Clean Energy ETF, down £3.85 with this investment, so 2.81% down with this overall. But long term, clean energy, I just can't see any future without clean energy being part of it. So I definitely think a long-term investment, this is a solid one to hold. Don't know what your opinion is, let me know in the comments if you agree. iShares Core S&P 500 ETF, weekly view, again, 2.3% down from last week. And sorry, again, I was going to say there, this is my biggest investment and it will probably continue to be that way. The 500 top performing companies in the US is this ETF. This is what kind of tracks. So yeah, big fan of this one. Overall, you can see though, £215.97 up for me. So 10.84% positive with this investment. So long may that continue. iShares Core FTSE 100 ETF, 360 units. You saw earlier that I increased my position yesterday on the Friday, and we're now above the hyphenated line. So we're above the average point for me, which is good news. And I just think if you're interested in this ETF, it's a brilliant time to buy into it because it is so cheap to buy into it right just now. But again, do not take my words as wisdom because what the hell do I know? You guys have to remember, I'm a complete beginner here, and this whole journey is me as a beginner showing you what I'm doing. So don't take any of these words as advice, please. But yeah, 1.22% down from last week. do not want to stop the recording. So yeah, 1.22% down from last week, and like I say, overall this is now £26.16 positive for me, 1.28% up. So again, like the S&P 500, long may that continue. Hive Group's next up, 25 shares, weekly view, down 8.37%. Overall, we're down £14.81 with this investment, so that's a drop of 51.14%. Probably one of my worst performing investments at the moment, but I said in a previous video, this investment was kind of a gamble anyway, so I'm not all that bothered about this one. Cineworld Group, 200 shares. I've not increased my position here at all recently. I know a lot of people right now are actually increasing their position in Cineworld. They think because it's so cheap regarding all the recent news, cinemas closing, staff getting laid off, etc. They think it's a brilliant time to buy into Cineworld. And who knows, they might be right, but I'm not increasing my position in Cineworld. I'm happy with my 200 units as is. And if we look at the weekly view, it's actually up 18.43% from last week, which is crazy actually, I didn't expect that. And yeah, my 200 shares there with Cineworld is now £17.74 in the red, so 23.43% down with this investment. And the last one here is American Airlines, 2 shares, 2 free shares, 3 people signed up through our referral links. Weekly view, 1.04% up. And yeah, £4.25 up with this investment, 28.22% up overall. So yeah, good news, but again, I'm not all that bothered about this one. It was free shares that I just received, and I'm kind of just holding on to them to see what happens. So yeah, who knows, I might even sell them next week. Looking at the overall allocation of my Trading 212 portfolio, S&P 500 still at the top, followed by FTSE 100, and then we've got the FTSE Emerging Markets, Royal Dutch Shell, and the Nasdaq 100. They are the ones leading the way. Now, if you're watching this video, if you're interested in getting involved in the world of investing, if you're maybe a little bit like me and thought that this whole pandemic is like a good opportunity to get involved with investing because stocks are essentially on sale, things are so cheap, then please consider signing up to Trading 212. It's the app that I use to do all my investments, as you can see here, and as you can see in all my other videos, part of this playlist. If you sign up with my link here, then you will receive a free share worth up to £100. I will also receive a free share worth up to £100. And like I always say, if you do end up doing this, let me know in the comments section of this video or any other video, I don't really care, what free share you receive, and I will let you know what free share I received from your sign up. And yeah, just be interested to hear what free shares Trading 212 is giving out. So consider signing up with this link, grab yourself a free share up to £100. I'll get one too. Big thank you. Good way of supporting this channel, supporting me, sharing and documenting my journey too. So appreciate it guys if you do. And that is all for this week. So once again guys, massive thank you for watching. I really do appreciate it. Please give this video a like, click that thumbs up button. Please consider subscribing to this channel if you want to see me lose all my money 5-10 years down the line and I will be a homeless person, unable to do my YouTube videos. If you want to see that journey happen and take place, then consider subscribing. And if you want to get weekly updates as to when I do these videos, click that bell icon too and you'll be notified of when I post videos. As always, any questions around Trading 212, investing, starting your own journey, etc., leave it in the comment section. I'll get back to you. And until next time guys, thank you once again. Hope to see you in the next video.